What's the most important resource that you have? If you really thought about this deeply, I think you'd come to the same conclusion that Joey and I did. It's time. In our newest book, What's Without Wall Street, the 3 Steps to Financial Freedom Through Passive Income, we talk about how are we tracking that time? What is the thing that we can do to get more of that time back?
That's right. If you've ever been listening to our podcast and thought, man, it would be amazing if I could take all the things that you guys have learned over the last 10 years and just summarize them, put them in some way to easily digest them and take action, that's what this book is all about. You're not going to want to miss it. Go to wealthwithoutwallstreet.com/new book and get your copy today.
Stallion, we got to break down the passive income report this month. Every single month, we break down all our personal passive income report that we do. And some people ask the question, Joey, why would you guys go through all of this effort and share what you're doing personally? How would you answer that?
I'll be honest with you. It's not really about you. It's about me. It's about how do we stay focused? Having to go through the effort of putting this report together every month, having to sit down with Russ and ask him questions about, hey, what do you think's going well here? What do you think we should be doing differently? It forces us to actually really get serious about this. And to be honest, without it, I don't think we would be talking about this but once or twice a year. And the lesson within that, and actually I was having a conversation with one of our mastermind members the other day. I said, this is no different than being a member of a gym and having a personal trainer. Why do you have a personal trainer? It's because they literally meet you at the gym and they focus in on that time to make sure you're getting the most out of it. But you could be a member of a gym and never go. I've done that for years. So, I mean, Russ has always busted me about that. But the point is, man, having this accountability every single month to come and bring this to you, it helps us to be better investors. It helps us to be focused. What would you say, Russ?
No, I agree. I think there's a lot of value in keeping our eyes on what we're trying to accomplish, and what you stay focused on will have attention toward it, which ultimately should have positive impacts. And I think you'll see that as we keep talking. Okay, Stallion, let's break down what happened in April as it pertains to our passive income report. I also think that kind of really, it's not just the numbers. We've been doing this now for almost 4 years, sharing this passive income report with you, both on YouTube as well as on our podcast, and putting the numbers on our website. But I think really the insights behind all the things that are happening are really what's the most valuable. For some of you, it's inspired you to go out and do some of these things. For some of you, it's helped you avoid making some of the same mistakes we've made. But I also think that, you've probably got into this idea of, hey, how do I build passive income? Who are the people I should be following? Maybe you read the book, Rich Dad, Poor Dad by Robert Kiyosaki. Maybe you started playing the game, cash flow. And inside that game, Stallion, as you know all too well, because your kids beat you all the time when you play it, there's 2 piles. When you have an opportunity card, you can pick from one of 2 piles, small deals or big deals. And I would love for us, as we start off today, as we look at this passive income report, as we show, I think for the month, we brought in net a little over $43,000. So not bad, right? But I want to break down small deals versus big deals today. I want to talk about things that we're most excited about on this report, but also some of the things that we're most frustrated with. So talk to me initially. Let's talk about some excitement. Looking at our report, looking at what's happened, what are you most excited about?
Man, I tell you what, it's hard for me not to get excited about land. It just is. I mean, it's constantly happening while you and I are doing other things.
What's happening?
It's growing. Land is being bought and sold while we sleep. Okay. I mean, just constantly. And we're getting into really cool deals, opportunities where our operators are calling us or messaging us in Voxer and saying, hey, we've got this really cool deal. Would you want to put in a little extra cash to take advantage of it? We can immediately flip it for 3 times what we buy it for. We're like, yes, can I have another? I mean, that's the kind of communication you want from an operator. And we're over 30, right at 31,000 gross, which our part of that is almost 22,000. per month coming in while we sleep. I don't, what do you not like about it? I mean, how can you not be excited about it?
Yeah, no, the land flipping business continues to be one of my favorite things. And there's lots of different ways that you can get into the land flipping business. For most people, they have to start out actually being the operator themselves. We had somebody recently comment on the YouTube page, "Hey, I want to do this done for you deal. How much money does it take?" I think that's a bad question. The question is not how much money does it take, is it the right fit for you? Don't look at this report and go, oh, they're making $22,000 a month as they sleep. I should do that. I mean, I know that's hard not to say that, but at the same time, there's a lot of things that go into making that work. And the fact that you and I don't need that capital today, right? It makes it a good fit for us because you and I have other incomes that we can keep rolling this capital. This, we started out putting in 100,000, 150,000, another 100,000, another 100,000. We've made contributions along the way, but we haven't had to pull capital out because we didn't need it. Now we could and we can, but we didn't need it. So when you look at this, you have to understand your own investor buy box and determine when do you need capital out. This may be the worst investment for you if you need instant capital back. I wouldn't say this would be the place to go. All right, let's talk about.
What are you excited about, Russ?
Well, I mean, there's lots of things on this list, but one of the things that one of the reasons that we actually started the passive income report is because you and I met two guys at an event, Pat Flynn and John Lee Dumas. And if you're not familiar with those guys, Smart Passive Income is Pat Flynn's podcast, or Entrepreneurs on Fire is John Lee Dumas's podcast. And those two guys were sharing their own personal passive income reports, but they were 100% affiliate marketers, right? Like they just talked about the things that they were doing to grow their businesses and the tools they were using, and people were buying those same tools and they were getting small affiliate commissions along the way. Well, you and I have had so many people come up to us and say, hey, like you guys are doing the short-term rental thing. How do I do that? Or, hey, you're doing this land flipping thing. How do I do this? Or, hey, you guys have talked about buying online businesses and doing this whole e-commerce space. How can I do that? Well, all of those things that were just courses and coaching programs, we have, created relationships with the people who do it. And I just love watching you guys have success going out and doing it yourself and coming back and telling us about what you're doing, about how the business that you bought is growing or how the business that you're running is working. And so we're building affiliate income through those relationships, through those partnerships. And I see that as like one of those things that just reminds me what got us into this from the beginning. That was not our focus. We were more investment minded focused of how we were going to build passive income. But I like diversification of the passive income stream. I think we should always be figuring out different ways to increase our passive income, increase our income in general, and not be focused on just one way to do it. So I'm excited that we've diversified it, and you see a pretty large percentage, almost 25% of our income for last month came in from affiliate income. I think that that's fantastic.
Well, who wouldn't? I mean, that's good stuff. Now, what are you most frustrated about right now that's on this report?
Easy. The stinking Bitcoin mining fund.
Ooh.
Like that is, man.
Why? I don't want to assume. Why is it frustrating?
This is so close to Wall Street. It is so close to Wall Street. Like, I love the fact that it's this alternative, decentralized platform that you can, help in the Fed. Like, I'm all about that, right? I love the concept of getting us out of the Federal Reserve and the central banking system, being able to just print dollars and make everything around us more expensive as a result. And you and I, back in like 2016, 2017, started buying these little computers that were mining Ethereum at the time. And as that currency went up in value as it relates to the US dollar, it was making a lot of money. Like, we made hundreds of thousands of dollars doing that, all very small investments. And you and I assumed if it's good on a small scale, it must be good on a big scale. So instead of buying a computer for $10,000 and buying 5 of them, 10 of them, I think eventually we ended up having like 20 of them a piece. We decided to go into a Bitcoin mining fund where we joined up with about, like 10 or 12 other people. We all put in, several $100,000 a piece, and bought all of these miners that specifically are going to mine Bitcoin, the Cadillac of all crypto. And we put in 175,000, and last month it kicked off a whopping $910 worth of Bitcoin. Like that's, and to date, I think we've maybe gotten $15,000 back off that 175,000 investment. If we put 175,000 and just bought Bitcoin 2 years ago, how much would it be worth, Joey?
A lot more. I can't do the math on the fly. So
it's over twice as much, because when we were doing this, Bitcoin was like $32 to the US dollar, and now it's like 66. So it's the trade-off between 15 grand and 350 grand. So yeah, I'm kind of hacked off about that. But more importantly, I'm not hacked off about what I missed out on. I'm hacked off that this is one of those areas that we cannot control, and it's so close to Wall Street. I just slapped my hand just saying, told you so, told you so.
And let me just add this. Your strategy dictates what you're investing for. And in this case, you just pointed out, what was our motivation for investing in Bitcoin? It really wasn't about the cash flow. Really, we were thinking, how do we go ahead and get some of our capital into an alternative to the dollar? And the Bitcoin has all the functionality of a good source of value, a good store of value. Why wouldn't we just put some of our money towards that as a hedge, as a defense mechanism? And to your point, we thought that the fund was actually going to return more because of the nature of how they were going to, the machinery and the operator behind it had so much more experience. Like we were like, well, it'd be better than just buying the Bitcoin itself outright. But now looking back, we're like, wait a minute. We actually brought in more variables like the ups and downs of the actual market, the cost of operating the equipment, the lag on the building out the machinery and all that kind of stuff. All that, I didn't consider all that.
Well, so basically, if you don't understand what Joey said at all, we made the decision. Do we want to just go buy gold, right? Like, do you just want to go buy bars of gold that exist at the pawn shop or wherever they're selling them? Or do you want to buy shovels, go to the place where gold is, and then pay all the laborers and a management team to dig and to get it out of the earth so that then you have the gold? That's basically what we're doing, just in a more sophisticated digital way. And the cost of the shovels, the cost of the labor, the cost of all the things, the power that it takes to run it, went up at a rate that far exceeded the amount of gold we're getting out of the ground or the crypto which we're mining out of thin air.
Yeah.
Bad. So that's the thing I'm most frustrated with. What about you? What are you most frustrated with?
Well, I'll just say, Cousin Eddie, my good friend, the RV, he's good for memories. He's created some great memories. One of those memories is how bad of an investment it was to buy him. And so as of right now, we've gone several months with no income because there's been very, very few actual people renting. Now, it has ramped up in April. I'll be glad to, talk about that in May. Whatever.
I'm sorry, we're in May. Are you?
Excuse me. I'm sorry. It's going up. I didn't receive April's pay until May, but I'm going to talk about that in May. Anyway, the long story is, it's just dragging me down every month. It's not adding income to this report. And, it's an L. At the end of the day, it's an L, and I'm taking it on the chin. And I am in the process of selling them right now. So if you know anybody that wants a great memory machine, just have them reach out, and we can sell Cousin Eddie.
I'm most frustrated about Cousin Eddie, too, in a different way. I went on a camping trip 2 weekends ago with my son, Ryan. And typically when you go to these camp out places, like where the RV parking spots are and where like the tents are usually pretty far apart. And so I knew that his whole trail life troop was going to be tent camping. And I thought, well, the whole purpose of going is to be right there next to him. But I'm most frustrated because the actual RV parking literally was within like 100 feet of where our tents were. And I'm like, I could have literally given Joey $100 and he would have made more money than he has in the last 2 months. I could have parked that RV feet from where everybody was. And when it was pouring down rain and there was mud everywhere, I could have been sitting inside an air-conditioned RV, sleeping on a bed. And I could have I had so many more. I could have used the bathroom right there instead of making like the, 300-yard walk to the, the little shower place, all the things. That's where I'm most frustrated with Cousin Eddie.
A memory maker, you missed out on the memory maker.
I got a memory. This would have been a better one. And to top it off, man, here's the insight on that. I asked those dads, I said, hey, by the way, now see where those RV spots are. How much would you guys have made fun of me if I would have showed up in an RV and parked right there? And they're like, no, not at all. I'm like,
even worse.
Even worse.
If you've listened to our show for any length of time, you've heard us talk about infinite banking and how we were able to use that concept to create over $50,000 a month in passive income. But it's just not that easy to figure out, how does this all connect into my own personal system?
Stallion, that's why we created the passive income operating system, bro. It shows you how to turn active income into passive income. It makes all the steps come together. If you would like to get access to it as a podcast listener, we've never given this away in public before, go to what'swhatwallstreet.com/PIOS. There was nothing worse than walking into class when you're in school and the teacher saying, pop quiz day. Why? Because you were unprepared. Are you unprepared though for financial freedom?
Don't be. Find out how close you are by taking our 30-second quiz at wealthwithoutwallstreet.com/quiz.
Let's talk about some things we need to consider. I want to talk a little bit about that small deal versus big deal, right? There's a debate out there of what's the better way to build passive income. And a lot of things that you and I did initially, we were building passive income almost solely based upon doing small deals. And then as time's gone on, we started doing bigger deals. And I'm wondering, for those who are listening, everybody's at different levels. What would you consider as a small deal? How much money do you need to put into it? And what are some of the small deals that we've been looking at over the last month or so?
Well, I'll tell you this. I think, first of all, to define it, $25,000 or less would be considered a small deal.
Okay.
Now, that could be any number of things, but for right now, the things that we're considering is really gotten into this online content business where you buy a blog or a place where people put recipes, or a place where they're putting any sort of content that others would be searching, and you monetize it through ads, you monetize it through affiliate links and other things like that. And we learned about this, of course, through our friend Sophie Howard, and she has the Freedom Navigator course. So you can actually learn more about it at wealthwithoutwallstreet.com/Freedom Navigator. But me, my two daughters, you and your two daughters all went through the course, and we started research, and we have since bought earthlygo.com. It's a great content site. And this month in particular, I'll pull it back up here. It created $2,326.85. That was with virtually no management from us.
How much money did you put into it?
I put $16,000 into this. I bought it for $16,000.
So that's if I'm doing the math with my fingers and toes, that's more than 100% return on cash there.
It is. And
okay.
But I will tell you this, that it's something that you really have to know what you're doing. And so in light of that, I've engaged with
Hold on, wait a second. You have to know what you're doing in order to own a business?
You do. I would highly recommend it. And while you can learn that through the Freedom Navigator course, I'm just not really spending a lot of time in that area. And my daughter is spending some time, but there's a learning curve, and it just takes some time.
Well, okay, so I want to break that down. I don't want to just assume that I understand. Definitely the person listening may or may not understand. You made $2,300 and something last month on a $16,000 investment. The month before, you had netted $1,162. Like, you've been making money off of this thing. What is it that you're wanting to tweak about that? Because it seems like what's happening is working. What are you trying to fix? This doesn't seem to be broken.
So the hard part about it is you don't know what you don't know when it comes to dealing with Google and these search engines. It's the algorithm that you want to continue to feed so that the current traffic that is driving these results continues. That's what's in the back of your mind when you own one of these. And that's the part that I feel like I know this much about, the SEO component, the ability to tweak what are the keywords that people are searching, looking at Bing versus DuckDuckGo versus Google. They all have their own ways in which.
So what are you trying to accomplish? So you're considering doing what?
So what I've actually considered doing is hiring a operator who their team has all the expertise of content writing, of creating the SEO backlinks and things of that nature to continue to increase and to purposefully drive that traffic instead of what I've been on.
What will that cost you?
Do what?
What will that cost you?
So this particular company is going to charge us $1,790 a month.
Manage $1,790?
$1,790 a month.
So last month you would have lost money. This month you would have got like $600 net.
That's right. But
what is okay? Hold on.
Process.
Hold on 1 second. So what is the upside? Like, are you gonna get like a 2-for-1 on that deal? Like, what do you think if your income last month for April was $2,300? Are you thinking it's gonna double, triple? What are you thinking about paying $1,790 is gonna give you?
It won't happen overnight. It will definitely take 30, 60, 90 days before we start to see the impact. And that's what I feel like we're doing now is we're investing in the impact.
What is the assumption?
The assumption is that this could double or triple our revenue, even more than that potentially, but I'm just trying to be conservative, by having a full-time operating partner who is purposely building out all the backlinks, all the SEO, all the content to continue to make it more and more relevant to people searching.
All right. So your thought is that I bought this site, I was making money, and now I'm going to invest more money in the deal in hopes that it will then outperform the cost of doing that. Right.
That's right.
All right. Now,
here's the other reason though, Russ, is because if I'm making money and I don't understand why it's making money, we've seen it with Google updates and other things recently where it just hits a cliff and it just drops.
But to the opposite side, will you understand why it's not making money when you're paying this guy $1,700? If it were to go bad on you, would you understand? Like right now, you're paying somebody or have paid somebody for Cousin Eddie for the last 3 years to manage it, and it's not made money. So you had a manager. Did you still understand why it wasn't making money?
Yes, I do know why it's not making money because the market just completely crumbled on it. But in this case, I have somebody that has a trust relationship that has been built through associations like Sophie Howard that knows how to do this, has been doing this for 15 plus years.
All right, Trav.
I trust their intuition versus my own at this point.
All right, Trav. I want to comment right now inside the YouTube, LinkedIn, Facebook, wherever. I want to comment back for you guys. Good idea for Joey to take something that's working and pay somebody that's going to now take it into the negative as it relates to, he's going to be in the red for next month. 100% he's in the red, right? Like it's most likely going to not be able to, outperform that in month one. Good idea for him to do that and see, you guys think, yeah, I think it's going to go double, triple. Bad idea. Joey should have just ran this thing out and sucked every dollar out of it can. So
I'd love to hear it. I'm all ears.
Let's see what people say. All right. I would say,
looking at.
So for on the small deal pile, hey, we got a podcast coming out soon. It would have come out sooner had Joey not deleted it whenever it was recorded. We thought we were deleting it.
I'm never going to live that down.
We were going to delete an intro, and he deleted the actual podcast itself. It was so good. but it's in the vending machine. And I know you guys are looking down there at Vanilla Ice, and you're like, isn't that an ice vending machine? And did it not make a whopping $32 last month? Like, you guys are really considering vending machines? Well, when we interviewed this guy that's coming on the podcast, and he started talking about vending machine, he was like, oh, ice vending. Yeah, I probably want to go on that route. I get that. I'm like, yeah, hindsight 2020, right? I wouldn't have done that. It's a bad idea. 50 grand to spit out 32. I mean, that's in the 100 unicorns area right there. But I would say I am really interested in this vending machine because it actually is nobody down, no payments for 90 days. And if you can actually put them in the right spots, which he gave us ideas of how we can do that, then you can make upwards of $800 a machine per month, $600 to $800 a machine per month. I'm excited about that small deal pile because you said $25,000 or less is a small deal. That's a zero. I mean, outside of what does it cost me to go to Costco and buy candy bars and energy drinks for the first month. I'll have whatever that bill is. But I think that to me is exciting, and that's something I would be interested in. We also had a recent guest on the podcast that got you excited about another small deal in the car rental space.
That's right. Yeah. So Aubrey Janik was our guest. And actually, this is a great segue into the situation that you need to be at our Inner Circle Live. Okay? Inner Circle Live in Nashville, August 9th through 11th. If you haven't already got your tickets for that, go to wealthwithoutwallstreet.com/live, where you can meet people like Aubrey Janik face to face, shake her hand, pick her brain on all the things that we forgot to ask her on the podcast. wealthwithoutwallstreet.com/live. This is going to be a live event that will change your life. And Aubrey's going to be there where she talks about buying cars for $5,000 to $7,000, putting them on Turo. And here was her point, because this is what Russ and I have been struggling with under the Turo game since we learned about it. How do you manage the debt service and the management expense to have this be a completely hands-off deal?
And the depreciation.
And the depreciation.
And the weed smoke.
And the weed smoke.
And the repo.
You can't do it unless you're in this, the way that she's talking about is buying them for $5,000 to $7,000. And here's what I told Russ. What she shared that with us, I actually went to her and said, okay, what are those cars? Which, by the way, are in her course. She goes through all of this in her course. And she pointed out that, like, man, a Mazda 3 from like about 9+ years ago are going to be in that $5,000 to $7,000 range. And she said, you guys can rent that for almost the same per day as you can like a 2023, 2024 Camry. And people who are in that ballpark, who are thinking about renting a car just for utility, they really don't care if it's the brand new car or if it's the 9-year-old car. It's just getting them from point A to point B. And she just says they rent like a charm. So, and the maintenance is really, really low because the parts are easy to find, so on and so forth. But man, that's what got me kind of fired up about it, is like, if we could do that over and over and we could hand it off to a manager, let's go.
Okay, one more comment for you guys. You guys have done the Turo space. I've clearly failed miserably in the Turo space. Joey, he has a car that's been on Turo, and in April made, what is that, bro? How much money? I'm trying to see that. You netted
57.
So you made some money, $557. Okay, good.
And that was after paying a management fee.
All right, so
that's what I'm trying to say.
You guys, I want you to decide, thumbs up, thumbs down. Should we consider small deals, going out and buying $5,000 and $7,000 cars as compared to the $35,000 truck I bought, the $50,000 convertible I bought, both of which are no longer on Turo, both of which failed miserably, right? Like, thumbs up on going the $5,000 to $7,000 route. Say, or thumbs down. Say, Russ, you learned your lesson. Don't double down by buying cheaper cars. Bad idea. All right.
But hey, if you want to learn about that, we actually have Aubrey's course at wealthwithoutwallstreet.com/cars, right? And you can learn more there. All right. What else, Russ?
All right.
What's the big deal, pal? Let's get into the big deals.
Okay, here's a big deal pile. This is a really big deal pile, and this is a current deal we've been considering. There's a church. I don't know if you guys know, but the United Methodist Church has split about a year ago, and now there's a decent amount of empty buildings, church buildings across the country, of where those who split and left could not keep the church. And there's this church that I drive by once or twice a week. It's got this beautiful lake out in front of it, and I'm like, Stallion, we should consider this. And we started talking to some friends of ours. We have friends of ours who are up in the Nashville area who both have bought either churches or conference centers and are having lots of success renting out venues, more for meeting corporate venues. And we've talked about that on the podcast before. We were really kind of interested in that. We do lots of live events. Hey, I wonder if we could turn this space into a venue. Wonder if we could use it. How can we make money on the deal? And its price point is $3 million. So definitely in the big deal pile, right?
Big deal. Yeah.
Far in the big deal pile. So as we start trying to break this deal down, Joey and I are like, okay, what are all the different ways that we could potentially make money on it, right? So we could rent the church out on Wednesday night, Sunday night to another church. And we started doing some analysis. Okay, Joey, how much money did we figure out we could rent it if we were going to rent it out Wednesday and Sunday night to a church over like a 12-month period of time? What would we expect to get per month?
Well, I'll tell you, it's not cut and dry, so we have to do a raise. There's not like a place you go online and say, hey, renting churches, blah, 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 this much square foot. We think it's between $4,000 and $8,000 a month,
okay,
depending on the square footage.
All right, so it is a church, right? So it's not like this, it's a 15, 20-year-old church, right? So we also said, well, we could also probably rent it out as a venue, like bring your kids there and have a birthday party or maybe do a low budget wedding, right? Like maybe your corporation could rent out the space and host an event, because the venue, the church would hold about 200, 250 people inside the sanctuary. And we're like, oh, so we might be able to rent it out, throughout the week and maybe on Saturdays for kind of a low budget wedding. Stallion, what was our range that we thought we could bring in for that?
Probably between $3,000 and $6,000 a month.
Okay, so we're adding up here. So somewhere we're at like $7,000 a month, maybe as high as $14,000 a month so far. We even get creative. Like there's a rental house that's up on the front side of the property that we're like, oh, we probably could rent that for about $2,000 a month.
Yep.
Okay, so there's some more income. Got that. We also this big church has a big, huge commercial kitchen. So I'm getting creative. Like we have friends that own different meal prep companies and do catering. We're like, I'm reaching out to them saying, hey, how much could we rent out the commercial kitchen to somebody like yourself who needs that space? And they're like, oh, you probably get $500 to $1,000 a month from somebody to rent that out. Like, okay. Sally, we even thought about the shared office space because they had some administrative offices, right? What sort of money could that bring in?
Yeah, probably somewhere around $1,500 per month.
All right, so man, we got all these ideas. We're like, rent it as a church, rent it as a venue, have the rental home up front, rent out some offices, do the commercial kitchen. Oh, we got this land. It's sitting on like 40 acres. We could sell the land, could we, Stallion?
Right, yeah, because the way it's laid out is the church and the rental house are on the front side of the land, right on the major highway, and then behind it is where all the acreage is. So we could just parcel that off and sell that piece. Probably about 30 acres of it.
So we start doing the research, start calling our commercial real estate friends, start talking to our buddies who do land development, saying, hey, what's this going to look like? They're like, one, a developer is not just going to come buy your raw land. That's just not what they want. They literally want to buy something that's already done. I'm like, what does that mean? They're like, you're going to need to do all the engineering. You're going to have to go and get all the zoning correct. They're going to want all the plot maps already drawn out for them. Like you're going to do all that work, which is 30, 50, 60,000. I mean, it depends. And then you're going to bring it to them and you're going to present it and say, hey, this is what we want. And I'm like, that seems like a lot of work without understanding what's going to happen on the back end. And they're like, oh yeah, by the way, given it's off this major road, the Alabama Department of Transportation is going to want to make sure if you're going to be putting that many homes on it potentially, you're going to need to put a turn lane. I'm like, oh, what's a turn lane cost, Stallion?
Maybe a couple $100, maybe, what are we thinking?
Okay, maybe like $500,000. I'm like, ooh, that adds up. I hadn't considered that in my calculation. So we started doing the math on that. And long story is Stallion and I figured out, like, okay, if we
but wait, don't forget this. If you're going to do all those things with the actual church building, all the offices, the church, the venue, like all, and have to separate it all out and do that, you can't do that on accident. Like, it's not like people are going to be like, hey, I'm just showing up on Thursday to rent it for the day. You got to have an event venue manager. Yeah. You got to have somebody who's dedicated to making sure the space is rented and managing all of the logistics and all that sort of stuff. So we're like, we've got to factor that in, the cost of that, and somebody who's constantly maintaining the property, both exterior or interior. Like, that's not a cheap thing, right? Neither one of those things.
All right, so here, I think you're getting the point here, Travis, that, like when you get into the big deal pile, there are big opportunities, right? There's opportunities to make some real money, but it requires experience that he and I don't possess, and it relates to this specific area. It requires a lot of capital, right? And whenever you're doing this, it's like compared to what? Like we take $3 million and put it in this project, and that's $3 million we can't put into a number of other things. So compared to what does the math look like? And you say, okay, if I had to pay $3 million, what would that monthly cost be? And what is the actual return? And we started breaking it down. It's like, okay, there's not really much margin in here unless we could buy this property for like $2 million, maybe down to 2.2. We could maybe get it to work. And so we decided to put an offer in. We put an offer in at 2.2 million. And what was the counter offer we got back, Joey?
They were like, hey, we welcome your offer, and we counter with 3 million.
wait a second, what? Your asking price is 3 million. Oh my goodness. Like, the only thing that'd been funnier than that if they'd been like, it's 3.1 now. Yeah. So clearly they're like, you guys are slapping us in the face and we're slapping back, #sand. And I think we're going to, take their advice and walk away, because there's no way to make money in that deal, at least from our perspective going through this. And so anyway, that's a big deal, pile deal. There's lots of others we could talk about, looking at buying businesses, investing, and new syndications, but we're running out of time here. So as we break this back down for you, just sharing with you again, the report for last month, we brought in a gross of $56,000 through all the activities, and we're up to 21 different streams of income that we have on the board. Not all of them produced last month, and we netted $43,000. So we continue to figure out ways to grow that. Our goal is to get that to at least $100,000 a month, and we've got some ideas of how we're going to do it. We're going to keep sharing those with you. Thank you for keep coming back to this podcast and listening. And definitely can't wait to see the comments on some of the questions we laid out there for you, whether or not we should be doing or not doing some of these new ideas. Thank you, Joey, for being such a good sport. Let me pick at you again. And as always, have an amazing day.
This has been the Wealth Without Wall Street podcast. Don't forget to subscribe to the show to break free of the Wall Street mindset and begin building wealth on your own terms in places you understand, so that your wealth will never run dry. See you next episode.